Hello, everyone. Welcome to our very first live streaming together with my esteemed colleague Francois from South Africa. So together we're going to go through the crucial US inflation. So with Miss Francois from South Africa.
Welcome everybody, and I do hope that you are going to have a fantastic live session with us today. So yes, as Andrea said, we are going to go through everything that is planned for today regarding this absolutely crucial economic indicator that is being released in about 30 minutes. So as we get into this, you are also welcome to ask us any questions that you might like, and we are going to have a bit of a discussion regarding this absolutely crucial event in the interim as well.
Exactly. So feel free, as we keep saying at every single live streaming, feel free to stick on the comment section below your YouTube live or Facebook, LinkedIn, and Twitter. Any question that you have, anything you want us to cover. It might not be a question about the data. It might be something that you wanted us to analyze together. So we have plenty of time until the inflation announcement. But before we move on and discussing a bit about the inflation, why it's so important, and etc., I would like to go through very briefly in regards to what is expected, solely the figures. So allow me a second to make sure that we are live everywhere, because I can see that.
I can't see us on Facebook.
I can see us on Facebook, actually. So
because on my side, I can't see us on the SA Facebook.
Let me double check. Yeah, they told me something is wrong. Let me double check. So it seems that our very first.
It must be my fault. Don't stress. Must be my fault. So yes. Okay, so I do see, though, while you are checking that, I'm going to just see some of the questions that we have coming through here at the moment. So I have a message here from David, and David says, hello from Nigeria. David says, what are your thoughts on Euro USD? What do you think? How do you think this will be affected by the news? So David, just hold on for me a second, because this is definitely something that we are going to be discussing in depth. And we are definitely going to be focusing on Euro USD, because that is personally one of the pairs that I personally trade a lot as well. So thank you so much for that question. But like I said, we are going to answer it. Just waiting for my colleague to quickly assist us in rectifying this problem with, well, the South African Facebook page. So hence why I said it must be my problem. But
I'm on it.
Then I do say here we have a message that says it can't be the lady's fault. Of course it can't. Okay, can't be her fault.
Thank you. That's it's never my fault.
Never her fault. Never her fault. So next question here is now there's just a bunch of messages flying through here all of a sudden. Next one says, if inflation cools, what instrument would we expect a pop from? So in my opinion, if we do see, regardless of which results we get, whether we get a cooling inflation or rising inflation today, in my personal opinion, I do believe the pairs that will probably see the largest movement would be our fiber. So that is Euro USD. The cable could also see some significant movement. But as well, if we are focusing on our indices, NASDAQ will definitely see some great movement as well. So I'm going to be having a look at that one during the process with Andrea as well. So we are going to have a look at that. And yeah, then we can take things from there. So those are just some more that I would focus on. And obviously gold. I don't think we can ever leave gold out of the equation. Gold has this tendency to always surprise us. Regardless of what happens, gold always has this tendency of surprising us with these type of events, having quite significant movement. So yes, and I do love the username. I get money. Fantastic. So yes, and then see we have a few people here logging in from Nigeria.
Yeah. Managed to find a solution. Not.
We did.
Yes, it was. I actually duplicate the event. Unfortunately, there was a problem with the initial event, but now we are live in both social media, Facebook pages actually, and YouTube. Yes, so we are good to go. Actually, sorry for leaving you alone a bit, but so let me go through the questions as well. Where are we standing? Oh, Nigeria. Welcome, everyone. Welcome. South Africa presence. Botswana. Welcome. So feel free to ask anything you want. So I will do that. The briefing in regards to the numbers, what is expected today, since we're already 20 minutes, less than approximately 20 minutes away from the data. So what is expected, guys, today is the headline to remain unchanged. Okay, so basically in focus today we have the core. Okay, and we're expected to see around the 0.3% rise in the core in October. So this is after a respective September gains of 0.4%. We're gonna share with you the calendar later on, just slightly before the data, but in focus are the core inflation, because we're moving into 2024. So we want to check whether there are any further upwards pressures on core prices into 2024, considering all these disruptions that we had from the global supply chain, bottlenecks. Remember, is the Israel-Hamas war, and also its labor market data that they keep providing some inflationary pressure, but we're going to discuss everything with Francois in a bit. But very, very briefly, this is what we're expecting today. We're expecting that the figures will result in a big year-over-year headline slowing to 3.2% from 3.7% in August and September. So down from the 40-year high of 9.1% in June 2022, if you remember. So I would like to discuss a bit why this today's inflation data, more precisely today, why is so important. So I would like your view on that, Francois. Why is it so significant? Why we have seen all this anticipation this week and this cautiousness on the trading ahead of today's figure?
Well, thank you for that. But yes, so if we do have a look at all the data that has recently been released, and if we have a look at some of the speeches that took place across the US from our Fed officials last week, we did see still hawkish comments coming through. But I know myself and you have had this conversation as well, that we sometimes just feel that the Fed officials just remain hawkish in their comments when they deliver certain speeches without some initial data backing that up. Where if we do see that inflation is not cooling at the pace that they expected it, this will obviously give them a slight bit more leeway with regards to keeping interest rates higher for longer, which is their ultimate goal at the moment. As the fact is, this keeps the dollar at that extremely dominant force where it is at currently. So, but on the flip side of that, if we do have slightly weaker inflation and we do see that drop from that 3.7 and we see it coming down to 3.2, 3.3 area, this will show that inflation is cooling. This will also add to that NFP report that we had a couple of days ago as well. And this will give that additional support that in the near future, we might actually have to see interest rates being decreased. And this is why this data today is absolutely crucial, as this will be that key indicator that will provide us insight and data into what is going to happen in the very, very near future. And this can also assist us as traders and analysts to identify longer term positions within the market and plan our trades accordingly?
I totally agree with that. It's all about, the focus is solely on the timing, whether they will postpone further the needs of a cat. And even though I don't believe that we're gonna, because we keep saying that it's at the end of its tightening, etc., and there was prospect that we might see another rate hike, the very last one in December, but that scenario has gone, right? And now we're speaking only about rate cuts and whether it will postpone further or not, isn't it?
Absolutely true. Absolutely true. And it really, this is why we need today. We need that additional input. We need that data to show us what is actually going on within this economy so that we can make more educated decisions going forward.
True.
So, Andrea, I have a question for you as well. I wanted to know if we have a look at, what inflation looks like at the moment, and you just spoke about we are down from those 40-year highs. How are we currently comparing? So if we have a look at the inflation rate, how does it compare to those historical averages? Are there any trends that you have identified, or are there even some anomalies that I know you just spoke about? The entire narrative has become just keep the interest rates higher for longer. So how do we compare what is currently happening to what we have seen from previous data?
We could actually, first in the very first part of the question in regards to a comparison with any historical average. As I said earlier, in 2022, just a year and a half approximately. So last year we have reached 40 years highs. So this, as such, we could claim that is other than a historical breakdown. It was a breakdown. Sorry, it was also we consider it to be an anomaly as well, because we have actually the last 2 years we keep comparing the whole situation globally. I will not focus solely on the US. We keep comparing with past recessions, global recession in 2008, 1919, etc. And we can claim as such that it looks as something new, as an anomaly of the so far typical theoretical recession period, or still we have not confirmed that we are in US we have an actual recession. We still see that this has been largely avoided so far, and based on what you said earlier, because there is still growth with the labor data still very, very strong, and this is as such as an anomaly. So remember that in a recession, even though inflation seems high, unemployment is under pressure, something that we haven't seen for the past 2 years now. So this, from a fundamental perspective, this is an anomaly. But also I would like to stick a bit on the stickiness, if you allow me, of inflation. So we can see that all these efforts and this surprisingly aggressive tightening that we have seen from Fed and the rest of the central banks have not gave any fruits. So the progress that has been made so far, it wasn't the desirable one, and it wasn't the one that it was actually expected. It was a bit of a surprise. So that's why, as you mentioned earlier, today's figure is important for providing some kind of a time frame, let's say, for the potential actions, but also to actually see whether we have a progress being made, and whether there is any space, it doesn't look like any space for the Fed to do more. So this we cannot be compared with 2008 recession, unfortunately, because there are deviations And I'm referring to the deviations in the GDP. I'm referring to the deviations on the labor market, even though it's cooling off a bit, but still, even the inflation, guys, okay? 3.3% expected today, 3.7 was in September. Still is far away from the 2% target that the Fed insists on keeping as a target. They are not reconsidering on updating or increasing the inflation target. So we still have a very stubbornly sticky inflation, and the anomaly that I'm calling in regards to that I'm referring to is that doesn't coincide with the rest of the economic data. So that's why we keep having a quite strong dollar, even though we're supposed to be at the peak of the tightening cycle. We still have, for example, gold quite still in a support. Okay, there was a significant reversal the last month, but still, compared to the historical impact that the recession period had into the trends, we can see that there is a big deviation. So yeah, so we can see a lot of actually a lot of deviation in every single sector that we have in a fundamental level, but also in the forex markets as well. So yeah,
brilliant. Thank you for that.
That's my point of view, at least. But
by the looks of the comments as well, we have most of our audience here today agreeing with you. So if I'm looking at what everyone is saying here at the moment, the majority of people here at the moment, yes, and thank you for that, Samson, as well. Samson actually commented on your analysis there, saying brilliant analysis. It really was.
Very much.
And I do see here that we have quite a few comments coming through saying that they are going short on Euro USD. I have one here as well saying going long on USD JPY. So as well, another one long on USD JPY, short on gold. So this kind of all aligns with what you are saying here with that stronger dollar. And it looks that most of our audience here is agreeing with this. And yes, so this obviously does add to that sentiment. So absolutely so true what you said. And yeah.
That was the very next question that I wanted to ask you, actually, because then I will because I can see the question from Manco Mo saying, if core inflation is down, what will happen to gold? Okay, I will not ask Francois what will happen precisely on gold, but I would like to let us know what happens today in the economic trends if we have a beat, and what happens if we have a missed.
Very interesting question. So we obviously have to look at, and remember, I think sometimes we forget this as traders, that nowhere on my desk is there a little crystal ball that makes very 100% accurate predictions. So all we can do is we can go on what data gives us. And to do this, we actually need to have a look at the report that is going to be released, and to give you an exact time, it's being released in 10 minutes and 7 seconds. So in 10 minutes and 7 seconds away, we will obviously get the report of how this specific report today is going to affect the markets. But based on that data that we receive, on that we can make a concise trading decision, if this makes sense in that sense. So yes, if inflation today comes out higher than expected, so if we get a higher than a 3.2% figure, and it shows that inflation is not cooling at this moment, this could indicate that the economy is still overheating and that demand for the dollar is still there. So this could increase pressure on the Fed to either tighten rates further or even keep it higher for longer. And that policy decision that they have would necessarily boost the US dollar. So yes, then we are going to see some of those comments that we saw. We're going to see a buy on USD JPY. We're going to see a sell on gold. We're going to see a sell on Euro USD. So yes, we are going to see the US dollar strengthening, as investors will then seek those higher returns from this. This could also hurt our stock market. So for me, being a NASDAQ trader, and I know in South Africa, this is the majority of the traders that I'm talking to today are all NASDAQ traders. This is definitely going to hurt that very, very nice rally that we have seen on NASDAQ during the month of November. So, but then we have the flip side of the coin. What happens if inflation is cooling? What happens if that data comes out and it comes out at a 3.1 or maybe even a 3%? Exactly the reverse of what we just discussed. This will lower the demand for the US dollar. This would decrease the value of the US dollar. This would be some fantastic news. Again, now looking for the stock market, accompanied with the fantastic earning reports that we have been seeing over the last few weeks. This could, boost that even more. So yes, that is, in my opinion, my general consensus on if we get a beat on inflation and it comes out better, bad news for the dollar, good news for everything else. If inflation is still on the rise, great news for the dollar, not so great news for the rest of our markets.
Totally. Hopefully, we won't be caught out of surprise today. I don't know. Lately, everything seems that they're like we have some constant surprises, especially from this morning from UK, for example. So that was a great summary, and I on time with Morgano questions regarding the thoughts on the impact of them. And this is precisely what Francois just covered. The scenario of having a miss and the scenario of having a bid today. We're just 7 minutes away. I can see that you have a lot of questions. I mean, particular assets that you want us to cover. Don't worry about it, guys. As soon as we have the data out, we're gonna go through the charts and take one by one and cover in the long term, in the short term as well. So what numbers are dovish and what numbers are hawkish?
That's actually a really good question. I was reading that now as well. I was gonna pass that one over to you for today. So yes, if you wanted to, lucky you. So if you had to answer that specific question, so at the moment we know what we are expecting. We know we are expecting that 3.2. We know last month came out at 3.7. So at which point in stage would you say, based on the expected figure for today, what will be a dovish figure and what would be a hawkish figure?
Okay, so obviously if we have, it's also, it has to do with how much a dovish as such, a dovish signal will be if we see a substantial decline or at least a miss on the expectations to the downside. That would be theoretically a dovish tone, because it will just give the reassurance to the Fed that there is not the need of a possible another 25 point interest rate rise this year. And I'm referring to the core, guys, okay? The focus today is on the core inflation. I will recall a bit what we have seen in the last press conference from the Fed and Mr. Powell, even though they have been, actually not only Mr. Powell, but the whole team, or nearly even the more dovish Fed members, the last few weeks have been sounded more hawkish than usual. So they remain in line with actually they still need, and we all need, to see a substantially significant progress on inflation. So also how much it will, the distance, how big it might miss today, if it missed, okay, that's the dovish scenario, because I'm not convinced. That would be key. And without seeing this kind of a substantial, significant progress to the downside to the inflation, without seeing this in combination also with unemployment, because this is still solid, then the rate hike cycle might need another rate hike, I'm afraid. We have seen the odds that for another rate hike to be detected significantly. So everything depends on today's reading in combination with the next NFP, obviously. But the ideal, the pretty dovish sign today will be, as I said, a significant progress on inflation, okay? That could end up the scenario of another 25 points rate hike that will just take that out of the table. So even though we are at 3% territory, which is, as I said earlier, much is 1/3 of the 9% that we have seen a year ago, and as I said earlier, we have this anomaly with the rest of the economic data not to comply with the tightening, such as the labor market, the GDP, and etc. Retail sales, imports and exports, and etc. Yeah, that's why the number today. It also is we need actually to see how much it will beat or how much it will miss. So it's not a matter of only missing or beating but whether we'll have significant difference. So in regards to the hawkish scenario, obviously a bit today and a pretty sticky or high, sticky to the upside inflation is a hawkish call for the Fed with that 25 points that I mentioned earlier. But there is a doubt that this will happen by considering the latest data that we have, by considering the sorry, that might be likely. Sorry, my bad. That is quite likely. We consider that energy is still high and it's adding inflationary pressure to the economy. So that's why. Yeah, sorry, we're out of time.
Yes, we are. So sorry to interrupt. Can you pop up the economic calendar for us
right now? Yes. Sorry, my bad. And here we are, and let me zoom in a bit. A minute to go, David. Yes, absolutely true. So let's see and refresh. So.
Ken, we are seeing a massive spike on Euro USD.
Let me refresh.
So we are seeing a bit of a weaker dollar. Wow. What a spike. I
think I'm gonna share the chart. Would you like to share the chart instead of the calendar? And let's come back to
I'll share the chart if you don't mind. Yes. I'm actually in a trade at the moment. based on what we just discussed as well. So I can actually share this with all our traders as well. Here we go. There we go. Beautiful run. Very close to my actual profits for today. So having a very, very beautiful spike here. So actually, you know what? I'm going to take profits on every single one of these trades right now. Very happy right now. There we go. Done, 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 done. So that's Euro USD. Very big spike here. We have a total movement at the moment. That was 58 pips. So super nice on this one. If we drop down on the cable, very similar. So cable actually pushed down. Cable had a little bit of a bigger spike here. So cable sitting at about 80 pips at the moment. Massive move up on that one as well. And then I think the most important question for today is, how did gold do?
Gold.
So,
the usual one.
Yeah, that usual one. Gold also seeing a significant boost here. So gold spiking all the way to about 55. So that is over 1,000 pip move that we already saw on this one as well. So massive momentum here. And then last but not least, pulling up NASDAQ, which just skyrocketed and actually had a bit of a gap and then continued. So from where we actually had that move, that...
Can you zoom in a bit?
Of course I
Just
can.
once.
There you go.
Nice.
So this actually spiked all the way from where we had the open, which was 15,592. And this spiked all the way to 15,800 at the moment. So that is an amazing $110 climb so far. So yes, market's definitely reacting to the results that we have received. And, you know, pulling up our economic calendar here, seeing that we saw significant cooling. So we actually came in focusing on the core, as you said. Instead of that 4.1, we came in at 4. And the month-on-month actually came out at a flat 0, which means that inflation kind of stood still. And there was no difference. So hence why we had that little bit of a drop. So, yes.
I feel that I have been so pessimistic before the data, and I wasn't expecting I wasn't expecting a miss today, to be honest.
Very true, and I think we were both on that one. I must say, I was right there with you, and I mean, even if we move over to USD JPY, look at this drop that we're seeing there as well. This obviously means that because we had that massive drop currently, that also takes us a little bit of a step further away from a Bank of Japan intervention. So yes, I think the CPI event has really created a lot of upsets, if we can put it in that way, from a trading perspective.
So that's your dollar yen in a 15 minutes or a 5 minutes chart?
15-minute chart,
15
actually.
minutes. Let me. So just to make it convenient for everyone to follow us, guys, I will put at the bottom of our screen the asset that we are analyzing along with the time frame, okay, just to make it easier for you. And actually, since we had some questions about dollar yen and you are sharing with us the dollar yen, let me scan a bit the question.
I actually see that we got a message from Nicholas.
Yeah.
Who actually went against the trend, because everyone in the comments basically stated they were going long on dollar yen. So I love the fact that you pinned his comment, because that's beautiful. Nicholas, well done, because he actually went short, and that is brilliant. So that really played out in your favor. So very, very nice trade on that one. So thank you for sharing that. Was there any specific question that you wanted to address here today on dollar yen at the moment, Andrea?
Not precisely for dollar yen. Okay, I would like to go through in general the to have an analysis for dollar yen in general, because you mentioned intervention as well. But I would like to add something. I saw right now in our newsfeed that before the inflation, we had Jefferson Fed Jefferson actually commenting. And I'm not sure whether that he's actually what is an interesting the interesting part of its comments today is that they suggested that he mentioned that the odds of a rate hike in January might be more than 33% priced in already by the market. So I'm quite wondering whether the reaction was also supported further by the Fed Jefferson comments, adding a bit of extra weight, you know, on the anticipation of inflation today, like just trying to turn the focus obviously was on the inflation today, but just what I said, like we have seen that the markets anyway are overreacting lately. I will not call that today's reaction is an overreaction, but they are sensitive, especially to central bankers. So coming out and commenting before the inflation figure just added further weight on the inflation release. Just a comment that I just noticed on the newsfeed. In regards to the dollar yen, since actually I've been to the headlines for a while, we have seen being at 30, just a breath away from 33 years highs at the dollar yen. So let's go through. I mean, let's zoom out a bit and see the overall outlook for dollar yen. As I can see, we have already tested the 151 territory.
So this is on the 4H time frame.
And it has already breached 151. So we are 70 pips down already.
Yeah, yes, we are. So that has been quite a significant drop. And now we are getting dangerously close to this next support, which is at, well, according to me, that 150.5. So that also on the 4-hour time frame aligns with our 100-period moving average. So that could be a good next support level, and maybe even potentially a new lower high point. So yes, well, is there any level that you feel different, that you will
No, we are in line on this one. In line with this one, I was checking the question, seeing that you are right. Some of our viewers were actually long on that one. So guys, in general, since I think, can you show the weekly chart just to have a bit of a comparison with the previous intervention? Okay, based on the okay, I will take it a bit out of the US and move on to discuss a bit about Japanese economy, since we are covering dollar yen. Let me change the caption as well because we're in a weekly chart. Allow me. So guys, in general, seems that we are near to a potential peak of this trend. Obviously, as long as we don't have any confirmation of intervention, there is further steam to the upside. There is further room to the upside with momentum indicators. The weekly chart, sorry, just to save the caption. Okay, the bottom. So for everyone that is joining us now. So from a technical perspective, especially after last week's performance, you can see that weekly candle that Francois has, the very last one, that's a weekly candle, which was like a strong, bullish, nearly full body candle. We can see that from a technical perspective, sorry, we still have some further room to the upside. I'm referring obviously to the overall picture, not what's going on right now due to the inflation and the pullback due to the inflation, the US inflation figure. But in general, you should know that the Japanese economy is likely to shrink further in in the next few months, and we can see this on how the yen is impacted, the Nikkei is impacted, the Japanese government bonds have been their performed so far. There is not, for the time being, a substantial support from the central bank. Okay, we have seen indeed some rounds of stimulus measures, but that doesn't look sufficient in order to help the yen, especially against the US dollar, with the yields differentials just getting wider and wider. And so still in a contraction, it's still expected to shrink further. So that's why I'm saying that at least for the near term, in the next by the end of the year, let's say, the yen there is still further room for the dollar yen to the upside amid yen weakness. So there is still contraction signals coming from the Japanese economy, and actually this will be, we need further confirmation obviously with further Japanese data, but that will be the 6th quarterly drop into the Japanese growth since spring 2020. So yeah, there is further weakness in the near future for yen. So this pullback, why I'm saying all this, why I'm discussing about contraction in the Japanese economy, further deterioration, etc., is because this could be the pullback. Can you put the daily or the 4-hour chart, please? After today's inflation figures with the decline on dollar could eventually, we need obviously to make sure that the decline will find a floor, but any pullback might be might see some buying pressure in the dollar yen. It's not something that I'm just stating that the asset has been in a downtrend despite in an uptrend, sorry. So regardless of today's inflation, okay, that might cause another leg down, okay.1However, if the dollar yen finds a floor, as Francois mentioned before, at 150.50.5, or even if that breaks, that takes us down to 149.90. That's the next support for me. I don't know whether you agree with me. 149.9.
149. Yes.
So that will, even if we see further dive to the downside, even possibly to 149.9, the dollar yen remains in an upwards trajectory. So only a break of below 149 territory could change the positive outlook for dollar yen. I don't know whether we are in line with that one, at least from
I am. Yes, we are. Yes, we are.
So we still have been a nice channel since August. Yeah. So obviously that's a huge move today. Might attract further sellers. So have in mind the support areas that Francois mentioned earlier. 150.5. Then the very next one. Okay? Yeah, that's the channel that I was talking about. Yes. I can see. So 150. So 151 already broken, right?
Yes, we are currently at 150.86. So we are through 151. So we are now approaching that 150.5, and we are approaching it at a rapid speed.
I think we should move on to gold.
Yes, let's do it.
Everyone is asking for it.
Well, actually, quite interesting. We saw that big spike in gold, and now we are just on the 5-minute getting a bit of a consolidation at that 1956 level. But I'm going to put it on a slightly higher time frame. So let's go to about a 4-hour time frame, and then just have a look at what we are seeing here at the moment. And just having a look here, we broke through. We are currently now trading just below that 100 moving average. So again, if this is broken, we can also see there's a slightly smaller trend over here. So where we are currently seeing that diagonal resistance, so that that supply level within the market as well. So if that, however, does get broken, we could potentially, in my opinion, push up to this first resistance over here, which is that 1963 level. And then if we break through that, we could potentially even push slightly higher to that 1970, around that area. I don't know what your analysis on this looks like.
Yeah, that's no, actually we're in line. It looks like that area that you just draw. It's a nice, it used to be a neckline territory of the M pattern. Correct. That we were discussing last week.
Yes.
So yeah, but so 1956. Let me just as well over here. So it's also, by the way, it coincides the 19. Let me be precise. I have over here 1963, 1962 actually. It coincides also with the 23.6 Fibonacci level from the latest upper leg that we have since the beginning of October. So that could be a quite strong resistance area, and this is what you mentioned earlier. Yeah, that would be. Oh, you see. Perfectly match your immediate resistance level. So let me double check momentum on that one. So I can see RSI is already above 50 and rising. Actually, keep pointing. The slope is quite sharp to the upside, while MACD remains negative. So a bit of a mix momentum picture over here, but we can see that there is a decreasing bearish bias coming from MACD. But yeah, I'm wondering whether that would be enough to break that level. It looks that there is the bullish bias might not be enough to break and extend higher to break that territory, that resistance area at 1962. Very interesting. Nice.
We are still on the RSI on the specific time frame, though we are below that 70 level, so there is still that slight potential to push a little bit higher. But obviously, we need to wait for this time frame candle to close as well. When that candle closes, we normally see some significant spikes within our indicators, so that could actually bump us all the way to that 70 level. And then if we do close again below this resistance level that we had over here, we could potentially see, I don't know, further downside back to that 38.2% Fibonacci support level once again, if that bullish momentum doesn't hold.
True. Nice. Shall we move on to the euro dollar? Will be the next one. What do you think? The dollar against has been covered, gold
It's
has
just
been
a beautiful
covered.
candle right now.
Okay, so let me update the caption then. Guys, we moved already. Actually, Francois, already it's on the euro dollar and the 15-minute chart.
But I think let's not say 15 minutes. Let's keep it to the 4-hour time frame. Let's see what larger momentums we have within the market. So I think let's put on a 4-hour and then discuss from here onwards.
Okay, so on that one, we can see that it's already recovered more than 40% of the July down leg. I'm referring. Let me tell you exactly the level. The 107.65 was already broken. It was that presents the 38.2 Fibonacci level retracement. So that was already breached and broken. I have over here a strong resistance at the 108.35 level. My immediate resistance actually territory. There was a.
I fully agree with that because that's at that red line over there, and that also.
Yeah.
I just have a bit more of a zone there. Obviously, if we're looking at all these previous resistance points, so I fully agree with that. As that push is a little bit higher. Slightly different picture though here than what we saw on gold, because the fact that if we look at our EMAs, we've had that golden cross, so we do have that bullish cross on this. And now if we're looking at our MACD, for instance, we are above the 0 line, indicating bullish momentum. We have also now broken way above the signal line, adding to that bullish momentum. So this could potentially keep going a little bit higher.
True. So, okay, we still have the round number at 109. However, not sure about that one. It would be nice to compare it with last November's. So I can see over here I had a note in regards to the U.S. inflation last November. So the reaction on euro dollar last November. So because last November we had actually the euro dollar having a breakout that turned the trend after the inflation. So the inflation was around 10th and 11th of November. So let me just have you find. So can you zoom out? Maybe you might.
I think it's this candle over here.
Yeah, can you see that? If you there was actually. Let me just.
This one right here.
Let me find it as well. Let me help me on that one. It is. Yeah, that's the one. The one that you were showing. That you were pointing earlier yesterday. So. Last year we had a bit of it used to be in it had the resistance. Actually, it was when it was we had a break of one territory down to 95.60. So the inflation, the day of that we had the inflation release last year was the day that we had actually a confirmation of a breakout above the one territory, and actually was the complete that was the confirmation of the end of this downtrend that we have seen for nearly actually 2 years. Okay, something it's something that needs to be seen in a daily or even weekly chart, but I would like just to remind you that last year, exactly in November's inflation figure, inflation release, it was when we had seen the euro dollar extending above one territory, and actually it was the confirmation about the end of nearly 2 years downtrend. I'm referring to that big downtrend that we have from since pandemic up to the mid of 2022.
Yes.
So that's just something interesting that. So are we gonna have another reversal? But don't think so. Considering the contraction in the European, actually we could, but no. Actually, considering how bad, how disappointing the European economy is doing right now, that's
not likely.
Not likely at all.
Mm-hmm.
It's not, especially with the latest German figures coming out, and so it might be a breakout to the downside this year instead of the upside. But yeah, as you mentioned, I agree on that one about immediate resistance at 108.35 to 108.70. So that could find a key resistance level, and that could find some selling pressure if it managed to breach that territory. So what else? Let's see. Let's see the questions.
I think we're kind of out of questions as well. So there's one here that says, so if the US dollar continues to strengthen, gold goes down, where does this leave our AUD USD with wage price increases for odds coming in later?
Sorry, was a question from a client or no?
Yeah, no, it was actually a client. It was a comment.
Can you share it? I cannot find
sure. Let me do this. There you go.
So if the dollar continues to strengthen or gold goes down, where does that leave Aussie with wage prices? Okay, so we have an Aussie trader.
We do.
Very good question. Shall I take over? Let me just.
Yes. Let me stop sharing here. There you go.
Okay, here we are. Okay. So, okay. So there, Nishta, since you mentioned Aussie, and more precisely you mentioned tomorrow's wage prices index. So that's a very good question, because actually RBA and if I'm not mistaken, RBNZ as well, they are have been the only bank in the last month that actually it was in line with the expectations, but actually proceeded with another rate hike. So tomorrow's wage price index, I'm not sure whether it will change RBA's action, but in general, you should know that Australia and economy, okay, what we have seen in Australian economy so far is that there is further room to tighten further. We have seen consumer sentiment soared significantly in early November, so that actually we have actually renewed, we could say, concerns over increased living costs in Australia. So tomorrow's wage prices index, if indeed, so it is expected to come at 1.3% in the quarterly basis from 0.8% last time. So any surprise to the upside is something that could support the Australian dollars against the US dollar. However, in general, the labor data in Australia as well had been quite solid, like the rest of like the US, more precisely. So the sentiment in general, in regards to the Australian economy, is that there might be the need for RBA to obviously keep rates on hold for an extended period of time, or even to raise interest rates earlier than what was expected. So is the strong labor data. Okay, we'll wait and see for tomorrow's reading as well. Is the sticky inflation that still is we have a sticky inflation in Australia as well, and also that the Australia economy is facing one of the worst housing crisis globally. If we compare with the rest of the major economies in general, there has been a significant rise in the mortgages rates, and it's expected to rise even more in the next 12 months. Something that, as I said, indicates further actually increased living costs. So that's why there is a very pessimistic view for the Australian consumption, particularly in the housing market. So that could add a bit of a ceiling still on the Aussie. So even though, okay, let me hide your comments so we can see. Okay, thank you for that one. And actually, let me just change the template a bit better. And I will get rid of Bollingers for now, just to show you that indeed we had a rebound away from the last 2 months bottom for Aussie. However, housing data, confidence, the indication of further tightening for the RBA at a ceiling on the Aussie dollar. And there is something that it doesn't need a lot of explanation, actually. If you check the chart, we can see a key resistance that was also actually used to be a support back in May. And I'm referring to this area over here at 0.65 to 0.6530. So this, for a fundamental perspective, the hawkish, the fact that we still see RBA to have further room to tight further, considering everything that I just mentioned: housing market, mortgages rise, confidence, all these at a ceiling to the Aussie dollar to move to the upside. From a technical perspective, this is a key resistance area, and only a substantial break above it could change the currently neutral, I will say, outlook that we have on the Aussie, because for the last, I zoom in, we are seeing more or less a range in Aussie since the beginning of August. So indeed, this down leg, this downtrend has found a floor at 0.63 territory, but since then is bouncing between 0.63 and 0.65. As long as we don't see Aussie extending above it, the overall outlook of Aussie remains neutral. Okay, Now, in regards to, let's get to the 4-hour chart. So the spike that we have seen ahead of the inflation data, and actually post the inflation data there, but this candle has already closed. There is it's further moving to the upside. So the resistance is still the one that I mentioned earlier, this 0.65 territory. So I can see RSI not flattened, but the slope has changed a bit. Let me hide my here, and let me also put the intraday setup just to see whether there is, okay, the intraday. So right now I'm in the 1-hour chart. The asset, it looks over bought, okay, already broken all 3 resistance levels from the pivot point analysis that I have. Stochastics though show that there is further room to the upside, and in the very, very short time frame, okay? I mean the 1-hour chart, guys, okay? Let me change the caption as well. 1 hour. Aussie USD, save. Okay, so it has been overbought. Still some room to the upside from stochastic. However, it's quite an extreme. It's in an extreme condition, so there will be the need of a correction eventually. RSI has already points on the right hand side, so we might see a bit of a consolidation or the need of a correction soon. What do you think on that one?
I do think that we could potentially see some small correction on the lower time frame based on the spike that we just saw. Because even if we just look again, just that high point that you have right there, if we see from where we are at the moment, we are trading just above the 61.8% FIB level. So again, this is obviously a very, very low time frame, so we have to take that into consideration. But there could be a small correction, and then if that resistance that we have, that because mine aligns perfectly with what you have there at the moment as well, I have that zone that is ranging between 0.649 and 0.652. And I think if we have a break above that, then we could see additional Aussie rally. Otherwise, we might see a short-term down correction back to our moving averages as well, which is more or less around that 64 level, which is also in line, 0.64 level, sorry, which is also in line with that 38% FIB level as well. So some options from my point of view on this one specifically.
Yeah. What else? What we're having? What other questions do we have for? Oh, I can't learn Forex like this. No way. Actually, I'm not sure whether it's a live streaming, especially explaining inflation. It's a nice place to start with. Forex.
No, not at all. What I'll actually do is let me see if I can assist the person who commented there. So yes, I do agree with you. A live trading session trading CPI is not the place to learn how to trade. However, we can absolutely assist with this if you have a look. So okay, so I hope it actually goes through. So I see it sent on YouTube. Okay, that one went through, and it actually posted to Facebook as well. I posted a link there to our education page. Okay, so on our education page, you can join myself, also my colleague from Kenya, Dennis, we actually host live coaching sessions where we assist you in learning how to trade better. We actually teach you how to analyze the markets, etc. So please head over to that page. As I stated, the link has been posted. So click on that link. All you need to do is register for the events. The events take place 5 days a week. But yes, I do agree with your comment. We can't learn how to trade in a live stream trading CPI. This is a slightly more advanced session. So yes, please click on that link and join me or my colleague Dennis for our education sessions, as well as Andrea also hosts additional education events where she has various different topics that she covers regarding more specific topics. For instance, your one coming up now is trading the volatility index, which is going to be a very, very exciting one as well. So what I will do as well is I will post that topic in here as well, so you will see that comment there too. So yes, there says I definitely need this. Fantastic. So there you go. All the links for the educational sessions, not the live trading events. Once we get all the basics covered and you know how to apply your fundamental and technical analysis, by all means, then this is the perfect place for you. But let's lay that foundation first before stepping into the ring, if we can put it in that way.
We have once again someone, and it's Sevilla for gold once again. We can expect bullish movement for the rest of the month.
Ooh. Okay. Interesting question. Bullish momentum for the rest of the month on gold. I'm not sure.
Okay, obviously we were referring to November because we're just two weeks away from the end of November.
Well, interesting enough, gold is still pushing higher, and those levels that we spoke about earlier, that trend line, that moving average, etc., that's on the brink of being broken.
Can you share it? Because I lost my setup on gold. Do you still have it, or?
I do.
Yeah.
There we go. Let me drop to a 1 hour time frame so we can see this nicely. So here we can see we are still pushing higher, just below our moving averages, as well as, so if we do break here, as we stated, if this gets broken, we will aim for that 1963 level. If that level gets broken, we'll be aiming for that 1970 level. And if that gets broken, then obviously we'll see which additional bullish momentum enters into the market. So yes, there is obviously, based on the certain supply and demand levels, and I think I'm going to answer the question in this way. Based on the certain supply and demand levels that we have, remember, as traders, as analysts, what we are required to do is look at the markets and look at what the market is giving us, and then react appropriately. So yes, we do have certain key levels when we identify our analysis. And based on the current data that we receive, there is a good chance that gold would have bullish momentum for the rest of November, as well as if we have a look, we still have the geopolitical events in the Middle East. That's adding to the sentiment for bullish momentum to gold. So there is quite a bit still going on when we do look at the specific commodity. Now, how far it will rally, well, that no one can really say. So this is why we have those key levels. Once broken, we can look for certain opportunities. And if it does go further than that, just consistently adjust.
Yeah. So where else, guys? What else? What's left to be discussed? Since we brought up gold again, just remember, okay, just something to remember for to have the back of your head, anything like today's, okay, today's inflation data, gold is don't forget that is strongly correlated with the economic data, especially inflation. So any indication, any clue, any signal, even from policymakers, okay, anything that could that it push back, or actually, anything that push back against rate cut speculation, okay, has as an impact the bullion to lose its interest, and the vice versa. Anything that brings rate cuts closer, then it could attract some interest into the precious metal. So yeah, that's why, for example, Moody's announcement was last week. Was this week?
No, it was on Sunday.
Sunday. It helped gold to find a bit of a support, because it was a low. Remember, it was they stated the lowering the outlook for the U.S. credit rating. So that's something that helped gold to find some support. So yeah. Anything else, guys, that you would like us to go through, to explain? Further, maybe. I've scanned. I went through the questions. There's nothing new. Bitcoin actually is steady at above 36, and then we have a bit of a pullback. Not really impacted from today's reading. Maybe the only one that wasn't affected by the US inflation today, at least significantly. Steady the whole day, bouncing between 36,150 territory and 36,700 territory. Dollar remains to the downside. S&P 500 just quite close to 4,500. Quite close. Let's see how we whether we'll manage to close above it today. Your favorite Nasdaq. We have a bit of a pullback on that one, but not substantial enough. No,
not substantial at all.
So okay,
I think that's it.
So that's pretty much it. Very, very important figure is out of the way. A furious reaction, we could claim, from the markets, right?
To all our traders still here, just also remember tomorrow we have PPI. So we have the flip side of the coin. So remember, today we had our inflation from the consumer. Tomorrow we have it from the producer. So yes, don't forget, every coin has two sides. So we need to look at both sides of inflation. So definitely something to look out for tomorrow as well.
Totally forgot that. We are absolutely right on that one. So
we were so shocked by the results, we completely forgot we have another report coming up.
Yeah. What else? Okay, so that's pretty much it, guys. We turn our attention to the PPI, as Francois mentioned. We still have some earnings coming out. Walmart, Target, okay, Home Depot was already out. Still, earnings season is not over, even though it might not be the key driver this time for the markets. So as I can see over here that the risk for a rate hike through January is about 8%, still quite low, even though today's numbers set a high bar for the further rate hikes, further supporting expectations that the terminal rate has been reached. Treasury yields plunged. Okay, dollar is moving along with the treasury yields as well. That's pretty much it. Yeah.
Brilliant.
So shall we call it a date?
I think so. Thank you so much to everyone who attended. And I do think that we had a fantastic session. And I think for our first session together, it was really an honor. So thank you for that.
It was my pleasure.
I think this session went really, really well. So looking forward to the next one. So yes, thank you so much, traders. Thank you so much for everyone who joined us here today. I do hope that, well, I know we had some traders who generated some good profits during today's session as well. I know for some it wasn't the best outcome that they expected, but at the end of the day, that is what is expected from trading as well. And this is why we manage our risk appropriately on every single trade. And we trade the data that is given, and then based on that, we can move forward. So again, from my side and everyone in the southern part of Africa, thank you so much and have a blessed day further.
Great. Thank you too. It was a pleasure from the other side, the Mediterranean in Cyprus. So it was a pleasure. Hopefully you enjoyed as much as we did, guys. Hopefully we might host further live streamings like with Francois. Any feedback is more than welcome, obviously. Oh, you have people coming in the office.
Yes, so that is for NFP. So yes, that is one of the nice things about the South African office and Santon specifically. When we trade NFP, we do trade it both online, but we also trade it live here in our offices. So yes, I am looking forward to hosting all of you for NFP. Remember, NFP is on the 8th of December. So looking forward to seeing all of you there. And if there's any additional people here from South Africa as well, I am heading to KwaZulu-Natal in about 2 weeks' time. So looking forward to seeing you guys at that event as well. We will be going to 2 different venues in KwaZulu-Natal. So please have a look on the website for that as well.
Perfect. So, more sessions on it, on it. Okay, guys, take care. Thank you for attending, and we'll see you on the very next one. Thank you.
Thank you.
Bye.